Welcome back, Alpha Hunters. Hope everybody had a fantastic week this week. The markets are closed for December the 8th, and it is my father's birthday, so I will be going out to dinner with him a little bit later. So let's get through what went on this week. Monday, very nice gap down to start the week on Monday. I don't really think anything major happened over the weekend. It's just market decided to gap down a little bit there on Monday. Nice little rollover, a little bit lower into that first 30 minutes, first hour of the day, really, and then the middle part of the day, nice little bullishness back up to the higher end of the day. Then a little bit of a settle out, sideways consolidation, nice little pump there. Last hour of the trading day, back up to the daily highs. Tuesday, nice little gap down again, and then we traded higher. First couple hours there. And then we had a nice little pullback, kind of sideways consolidation going into the end part of the day for the last couple of hours. Wednesday, very nice gap up here on Wednesday. And then we faded the entire day. We faded all day, basically just down to the weekly low, snagging the weekly lows right there at the low, last little bit of the trading day there on Wednesday. Nice little gap up here again on Thursday. And then it was a slow grind, kind of very choppy grind higher throughout much of the day on Thursday. Nice little sideways consolidation there to end out the day on Thursday. Friday, nice little gap down, traded higher first hour, pulled back for about an hour and a half, 2 hours. And then we just kind of went bullish into the close. Second half of the day, very nice bullish action there to end out on the highest parts of the week. This is basically the highest point of the week, of the year, really. So, yeah, we hit the 52-week high for the year. What's kind of interesting, we're going to go through some things, but yeah, that's kind of the way the flow of the week went. And as you can take a look here, sector rotation, you can see energies underperformed the most. Yeah, they were definitely getting hit. The crude oil markets, energy markets, gasoline, heating oil, they were getting hit pretty good in the middle part of the week. Had a little bit of a bounce there late in the week. But yeah, XLE down at the lowest parts of the week, most underperforming. Materials, staples, real estate, utilities, financials, all underperformed the most. XLV, XLI kind of right there in line with the SP 500. So, kind of right there performing with the market for the week. XLK, XLC, XLY, that's tech, communications, and discretionary, all outperforming for the week. Now take a look here at week-over-week options change. You can see kind of going out over the next few months, not a whole lot kind of going on. Monthlies for January, quite a bit of activity. Monthlies there in February, quite a bit of puts being bought there in that month of February. And for the wrapping out the year, though, December 22nd, December 29th, there's some activity going on there, a little bit more puts, than calls. But look at the options activity for December 15th. That's going to be this next week. A lot of puts and a lot of calls. Man, a lot of puts. A little bit more puts than calls, but if you do know what's going on this next week, there we will be getting the CPI data Tuesday morning, and we will also be then getting Fed decision on interest rates, Fed funds rate on Wednesday. So a lot of people probably getting some bets in before we get into next week. Now taking a look here at the VIX. Yeah, we had a little bit of a higher open on Monday. As normal, typically Monday we have a higher open on the VIX, and then just kind of very slowly broke down this week, but Friday was the real breakdown. Made a new yearly low there on the VIX, getting down really into the below 12.5 area. So yep, very interesting that we continue to break down here on the VIX. It wasn't really doing too much here over the previous couple of weeks, but Friday, very nice breakdown day there on the VIX. The DXY, the dollar index. All right, so earlier this week, kind of talking about this one, looks to be like it could be setting up a very nice head and shoulders pattern. You got a shoulder there, neckline, head, neckline, a little bit off there, shoulder, and then maybe it's continuing back higher. So very possible that could be happening. And, if it does happen, maybe we see dollar kind of go a little bit higher here over the near term. So it's going to be very interesting to see what happens here with the dollar, the DXY, early this next week. It'll probably be a big determinant. Probably going to get the CPI Fed day Tuesday, Wednesday. I'd imagine this is either going to play out breaking out back up into the bullish direction or we're going to be breaking back down. And this is really just going to be a flag pattern. So if it's just a flag pattern, plan on this rolling back down, at least down to, 102.50 if it doesn't continue to go back down into some lower levels. GLD, the gold trust. All right, so I'm going to actually go to really the commodity, but you can see nice little pullback breakdown here on Friday. That you just saw the DXY was up pretty good, but when you look at the futures last Sunday when the futures market opened, it had a very aggressive pop and then it broke back down. Now I don't think this is like a major reversal. I really don't. You might think that and you might play it that way. I don't think it is. I think there's going to be an opportunity here in some of these lower levels, and I was kind of mentioning this earlier in the week, that as we kind of pull down into some lower levels around 2000 to maybe 1950 or so, like something like that, that you're going to want to just probably be bullish on gold going into the future, and I think any kind of dip are going to be met with buyers. So I'd be looking to be a little bit more bullish here. I wouldn't be overly aggressive, like leveraged bullish, but I would just be bullish on any kind of pullback. And we got a pretty good breakdown there on Friday. All right, taking a look here at the 10-year yield, and we had some pretty good breakdowns on Tuesday, Wednesday, and Thursday, Friday. You can see us bouncing back higher. What looks very interesting, if you go to a weekly, it looks very much like a little bit of a lower hammer setting up there. Kind of mentioned that we could get back into these highs that we had back in July, possibly February. Also kind of intermixing pretty well with the highs that we had back last year in October. So yeah, pretty good spot. You're going to get some resistance there in that zone. Maybe we come a little bit lower, or maybe that was kind of it. Maybe we'll bounce up and then we'll kind of form a nice little, pullback, if we do something like that. Or maybe we come down, break down, and then maybe we bounce up a little bit more. I would imagine we do have a little bit more of a consolidation. I don't think we're just going to continue to drop off kind of at the pace that we did throughout the month of November, early December. So I would expect this is a pretty good spot to be probably just more bullish on yields, maybe bearish bonds for now, or probably my preference is just wait, see how it sets up. I would see how it sets up because you're still in a pretty good downtrend, and I think we are, though, getting into a pretty good spot to see how things set up and consolidate. Taking a look at the 10 and 2-year yield curve inversion, very nice breakdown pretty much throughout the week. Nice little pop there on Thursday, but it was nothing because it was undone on Friday. So yeah, back down to the lows that we were kind of putting in towards the end of November. And now it's really just kind of a wait and see how things kind of set up. If you want to go look at the 2-year yield, the 2-year yield really hasn't been breaking down as much as that 10 and 20 and 30-year yields. Really over this week, the 2-year yield was basically not breaking down anymore. It even bounced pretty good on Friday. So take a look at that. Looks pretty good. HYG, we know, has been on an absolute tear, getting back up over, basically the yearly highs here over the past week and a half. We didn't really see a whole lot, just a very volatile kind of consolidation to start the week. Very slowly managed to get back up over last week's high, and then we kind of pulled back there on Friday. So we didn't hold the breakout that we had on Thursday. Yeah, kind of like I was mentioning with bonds, not exactly a great spot to maybe be going bullish on bonds, but I think right now it's a really good time to probably peel back if you've been bullish on bonds and maybe look to see how things set up going forward. So same kind of deal there on the LQD. LQD's been ripping it as well. Very nice, strong move there in the month of November. All right, taking a look real quick at the U.S. unemployment rate. We talked about this a little bit on the live stream on Friday because we got the unemployment rate to come out Friday morning. We got also non-farm payrolls came in at 199,000, and we got that, and that was expected to come in at 180,000. So a little bit better there on the non-farm payrolls. Unemployment rate actually came in at 3.7%. You can see it here, monthly chart. The market was expecting 3.9%. So what's rather interesting is this tweet by Carl Quintanilla. He used to be on CNBC. I don't even know if he's on CNBC anymore. But what's really kind of interesting is this part right here. Jobs number includes 47,000 workers returning from strikes. Oh, all right. So take a look here at the SPY. So one thing that we were kind of talking about, or really Yeah, kind of what I was talking about on the live stream today was it seems like we are just slowly grinding through this price level that has been a previous resistance, right? We were kind of rejected out of here back in July. It was a resistance, big time resistance back in March. We also kind of double topped in the same area back in February of 22, March and February of 22. So kind of an important spot, but I think we're about to get to that point where the market and people that are bearish or people that are not in bullish on the market are going to give up, and they are going to buy in, and they are going to push the market up. Now, this is where it's going to get very interesting to see just how high we push, because we're only 4% or so away from the all-time highs. And if we wind up pushing all the way up and take out those all-time highs, be curious to see what happens. I actually think we would wind up doing something like that. And to be pretty honest, I don't think we need to really take out the all-time highs to see this happen. I think we are about to see one heck of a pump here. Maybe it's 3%, maybe it's 2.5%, maybe it's 4.5%, 5%. But I think we're about to really kind of pump up out of here. Maybe we get up to the 470s, because that was kind of where we had a lot of tops here just before we got to 480 back in late 21. So it'd be interesting to see, but I definitely think that'll be happening. And just because it seems like we're just slowly getting through this price level that's been an issue before. And typically if we've gotten to this price level, we see an immediate kind of rejection like we have like previous 3-4 times. And we're not seeing that. We're seeing it slowly grind up through there. And we know inflation's been coming down, so I don't think that's going to be bearish. So unless the Fed comes out and says, "Yeah, we're going to hike rates," I don't see any reason to probably be bearish unless the Fed comes out and talks very sternly, very hawkishly. And they need to talk very hawkishly because this market is about to explode higher. The Qs, the triple Qs. All right, so the triple Qs probably going to be part of that explosion higher, right? They have the biggest stock weighting, with Microsoft, AAPL, all those guys. Looking pretty good. Probably would imagine if the SPY makes that move, that, the Qs would probably make a move back up to its all-time high too. Because it looks pretty good. It's rested here for about 3 weeks. So the Qs look really good here to continue higher. Some of the other major ETFs here I got, they have not consolidated that long. They've only kind of consolidated for about a week. But yeah, the Qs look really good there. So kind of talking about the IWM, maybe not consolidating as much, but the IWM is a little bit more choppy here over the past month or so. Very strong start to November, and then a very violent pull down, and then a nice pop, and then it kind of consolidated there second half of November around that 179 type price level, and then the first day of December kind of ripped it higher. But yeah, it's consolidated here for about a week. It looks like it wants to continue higher. A lot of things look like they want to continue higher after pretty good consolidation, especially this week. We didn't really move too much on the stock market, but we just kind of like slowly grinded higher. The DIA, the Dow Jones Industrial Average ETF, very much looks that way. Very much ripped it throughout the month of November. Look at this. This is like the longest consolidation pattern it's had in a while. You can go back and look in mid-November. Pretty good consolidation, but it was still kind of like in an uptrend. So yeah, nice sideways movement here, maybe even all the way back to early August. Nice little sideways movement there before it broke down. So yeah, this is a pretty good sideways movement that we got this week. All right, take a look here at the RSP. Yep, RSP very much that way, very much ripped it throughout the month of November. Nice week of kind of settling out, looking very bullish there as well, looking like it wants to continue to ride higher. And I mean, who can blame it? There wasn't really much in the way of bearishness kind of coming in this week. It kind of started that way. You saw that gap down on the SPY to start the week. Early week bearishness, nothing crazy, but just kind of resting, especially with how much we ripped it there on Friday. But yeah, I mean, other than that, we ended the week kind of strong, kind of up at the highs of the week across a lot of the major ETFs here. So yeah, it looks pretty strong, looks pretty good. It looks like we're going to continue higher. So Alpha have a great weekend. Take care. And we'll see what goes on with CPI on Tuesday and then Fed on Wednesday this next week. Alrighty. Take care, Alpha.